Hello guys, in this video we'll be talking about the institutional order flow and how important it is for you as an ICT trader to make use of it. In fact, if you are using ICT concept, then it's a must for you to understand institutional order flow. When you are studying ICT, when you learn about ICT, be it a new trader or you're already into ICT, besides understanding ICT PDRA, the other thing that is very important, the other element of ICT that is very important that you need to understand is institutional order flow. Why is that? Because that is how the market moves. If you understand it, then to remove so many confusion from your trading, and you will get to know that you can't do without it. And most of the time that I used to be afraid that a move has started and you can't get anymore. You see, I'll show you how you can use the institutional order flow to get in the market and still profit something from it. Institutional order flow is that when you are bearish, up close candle will be your resistance, and when you are bullish, down close candle will be your support. But there's something else I want you to know, that it's not only up close candle that can be your resistance when you are bearish. You can make use of all the ICT PDRAs, the 7 main one. That is the mitigation block, the bearish mitigation block, the bearish breaker, the liquidity void, fair value gap, order block, rejection block, hold high and hold low, and then the bullish PDRA matrix. That is a bullish mitigation block, the bullish breaker, liquidity void, fair value gap, order block, rejection block, hold low and hold high. Because most of the times there will be order block. That is when you talk about up close candle, you're talking about order block. But most of the time the market will not get to the order block. So you have to understand when you see institutional order flow, you don't think that you wait for market to get to the order block for you to find an entry. As long as the move has started and is going towards a particular direction, make use of all the main ICT PDRA metrics, the premium PDRA and the discount PDRA. As you can see, when the market was bullish, yes, down close candle, we are acting as support. Down close candle, we are acting as support most of the times. You can see here, we are acting as support. Down close candle acting as support. As you can see, acting as support most of the time. And as you scroll down, you can see that there is a liquidity void there, no down close candle. So does it mean that when there is no down close candle, you will not take a trade because you think that the market should trade all the way down to this down close candle? No. The liquidity void, the fair value gap, and every other of the ICT PDRA metrics can be used as a reference point when you are talking about the institutional order flow. They can be used. They can be used as your resistance. They can be used as your support. They are all part of the ICT PDRA metrics. So make use of them. When you are looking at the price range, we are marking out all the PDRAs that are available there. You should know that the market can get any of them and react from it. So you don't get confused when you are waiting like this on this range now. Maybe you thinking you should wait for the market to come down to this down close candle before your trade will be valid. No. As long as the market has traded to the discount, any of the PDRA can be used. And why the PDRA are so important is that once price get there, there are ways that price will react from it that could tell you that yes, this PDRA can be taken seriously. It can be can be used for to validate your trade. It's very important that you understand all the other PDRA metrics and make use of it. That's why you can't rely on just the order block, because most of the time price don't even get to the order block. For me, I only understand that order block work when the market is about to take off. Maybe there was a consolidation first, and then the market there's a break of social. Then you can see that market to get to order block most of the time. But as the order flow keep moving up, most of the time you see that the market is trading back down to mitigation block, trading back down to fair value guide, trading back down to liquidity void, all those other. So understanding each of these PDRA and how it works help you understand well, help you to understand the institutional order flow. The other aspect of the institutional order flow I want you to know is that when they move, let's go to the weekly. Let's say that the weekly, you see how this market comes down here like this, how it comes into this fair value gap and start going up. As you can see, you see that all these places, they are up close candle. What I want you to understand that once the market won't stop on the weekly and it starts going up, until price will get to its destination on the weekly, until price get to the one price trade to the weekly discount PDRA and start going up, until price get to the premium PDRA that is on the chart, and maybe you have marked out on the chart, the order flow on the daily, they have to be on the daily time frame, the down close candle, the fair value gap, the mitigation block, the breaker, all of these things will have as support until price get to the weekly premium array. What do I mean by that? Let's go down to the daily. But you have to look at this. Let me mark it out for you so that when we go to the daily we can see what I'm talking about. Let's see this area on the daily. You can see that as price is going up, it might look like a one swing up, but on the daily there might be so many trading opportunity for you. You can see once this high was broken, we have this market coming down to trade inside this fair value gap. I hope you can see the range now, because I'm removing it so that you can see very well. You can see that the market come inside this. Can see how the market is coming inside this place to act as a resistance. So even if you can see that even if you are not able to get in down here, you can use the institutional order flow to get in your trade. And shows that the market will not eat your stuff, because on the weekly the market is now bullish and the order flow has to be maintained and be followed on the daily until the market gets to the weekly premium array. So that's how it works. Even on the daily time frame, that's how it works as well. If the market has started moving up like this on the daily, on the 1 hour time frame, you see how the order flow is being maintained. The market will make sure that as its daily start moving up like this on the 1 hour time frame, no down close candle will be broken through. You will maintain that order flow until price get to the daily PDRA. So if you understand it like that, it will really help you, so that once if you don't get in on the daily, or you don't get in on the first swing as the market start moving, you don't just give up. You still have a lot of opportunity on the 1 hour as the market is providing opportunity. Maybe fair value gap, order block, you can make use of it to enter, believing that it's being supported by the higher time frame institutional order flow, that the market is moving towards something on the higher time frame. As long as you mark it out on the higher time frame that this is where the market will reach for, that the market has started moving from the daily discount array and is reaching for the daily PD array within this price range. There's a lot of trading opportunity on the 1 hour time frame. Likewise, when you're on the 1 hour time frame, the institutional order flow works even down to the 1 minute. If you really understand it, you will not be to help you to overcome FOMO, that is fear of missing out. You help you to overcome, because you know that once the move starts, it's not that you have missed everything. As long as there's this, you know where the market is going, you can use the order flow once the market starts moving to get in the trade and still take something off of it. Let's go to the 1 hour chart and I'll show you something. On the 1 hour chart, there is an example I want to use here. You can see this move here from here. See how it's moving. Where the move start from? Let's do some 1 hour on the daily so that you understand what you are talking about. This low was it has paid up to the let's say there is a fair value gap here, liquidity void, here. As the market trade it, which is the premium PDRA, as the market trade into it, you see what happened in the 1 hour. Let's see what happened in the 1 hour. This was when the market trade into that area that I showed you. Like this. This was trade into daily liquidity void. So as you can see, when they start from there and the market breakdown, you can see the 2022 model here. There was a run on stop. There was a run on stop. There was a run on stop. After the run, you can see there was a run on stop, and the market breakdown to take down this. There was a displacement, and then within the displacement, that range, you look for the fair value. That is the 2022 ICT mentorship. You look for the fair value gap there. From there on, the order flow has been maintaining order. You can see that's maintaining order, coming back up to take resistance at the 1 hour premium PDRA and going downward, maintaining resistance at an up close candle and going downward. They are maintaining resistance at an up close candle and going downward. You can see it like that. See, so that is how the order flow work. That is how the order flow work. When you understand it, when you understand how the order flow works, you don't get confused in mind. You don't rush. Even if you miss that 2022 model entry, you can see how many times you still get an entry. You can see how many times you can get an entry here. You can get an entry around this place when there was a run on stop. You can get an entry on this place, at this place like this. When there was a run on stop, you can get an entry at this place like this when there was a run on stop. So it's very important for you to know this institutional order flow and understand, because it will help you a lot. You take away a lot of confusion. And you can see the market is maintaining the order flow. It has not yet breaking. So if you want to see if the market has break the order flow, it means that it has to break this high like this. Once you break it down, you know that. But at this moment, you on the daily, you see, you know that the market at this particular moment on the daily time frame, the market is at, if you look at it, see where the market react from. Where the market react from? React from a fair value gap. And what I'm looking at, I'm expecting it to go up. To the, that's what I'm telling you. You guys can see there's an upward candle here. But if the market want to continue going downward, it might not get to that up close candle. It might not get there. And it might stop here at this fair value gap or somewhere here. It might stop there. So it's very important for you to know that when it says general order flow and say up close candle should act as resistance when the market is bearish, and down close candle should act as support when the market is bullish. It's also important for you that it's not only when the market trades to up close candle or down close candle that an institutional flow can be valid. You can make use of all the 7 main ICT premium PDRA and ICT discount PDRA, because as long as price get there, you already know what to expect. You already know that there's something on the lower time frame to look for. Tell you that as price has got to the daily discount premium array, there's this particular place market is going to react from there. So it's very important. As you can see, you can take it down. You can even take it down to the 5 minutes your entry time frame that you enter. As this market is moving from here like this, as it's going down like this, till it gets to this level, on the 5 minutes you can use the institutional order flow to get an entry. If you are not able to get an entry around this area, you can still use the institutional order flow to get an entry. All the most important thing here is that you know how to read the market. And I have a video on ICT PDRA metrics that tells you the importance of the PDRA metrics. That is through the PDRA metrics that you'll be able to read the market. That is when you understand, because the market is moving from one PDRA to the next. When the move started, it don't just move, it's going to stop. If you observe very well, all the time frame, all the assets class, all the pairs in forex, you allow that when the move starts, as an ICT trader, we are not confused. The question we have asked when the move has started is, where is the market going next? And it's very simple. Like this move now, when the market starts moving like this, it's very obvious. Where is it going next? This fair value gap has already been traded. So where next? This fair value gap. Only there's an order block and a breaker block. So it's very simple to determine the direction of the market if you understand the PDRA metrics. So, and along with you understand the institutional order flow, it will help you to make your trading easier. So take your time to study, go through the chart and study how it works. When the weekly start moving from the weekly discount PDRA towards the weekly premium PDRA on the daily time frame, the order flow is that the market will be supported by the premium PDRA, by the discount PDRA. The market will be supported by, as it continue going up, and every time the market retraces back down to any discount PDRA, is the opportunity to enter, as long as you know where the market is being drawn to on the weekly chart. So it's the same thing when the market move started on the daily and you come down to the 1 hour, and you know where the market is going to go on the day, when the market move from the daily discount array and end it to the premium array, you know premium array, you know where the market is going to move. You mark it out, and until price get there, you have a lot of opportunities to get an entry on a trade. So take your time to study, because it will help you a lot. It will help you not to be confused as where is the market going to stop. Is the enter, is it going to reverse? No, because the market has a direction, it has where it's going to. So it won't just stop at anywhere. When you mark it out, you enter a trade with some level of confidence that yes, Your market is heading somewhere, and you are anticipating, you are expecting it to get there, so you place a trade, and there's high chance that that trade will pan as well, and you make money from the market. So take your time to study the ICT concept, the institutional order flow, as well as PDRMS, because these two, they are very, when you understand them, it will make your trading easier. Thank you very much.